folks, welcome back into the 7 Financial Blind Spots. Bob, I love this one because there's no right or wrong answer, and about half the people watching are going to be in favor of this, and the other half's going to say that's the stupidest thing ever. Mm-hmm. Should you or should you not pay your house off early?
Boy, that's a tough one.
It is.
You know, it's like I always talk about having money in the bank. Should you have money in the bank at 1% interest?
I'd rather have money in the bank than not have any money.
Right. So I always call money in the bank as pillow money. Mm-hmm. There's certain people that are going to sleep well if they have money in the bank and they know they're not getting a great rate of interest on it, but they feel comfortable. Well, this is the same thing with the mortgage. There's a certain amount of people that are going to, maybe it doesn't make financial sense, but they're going to sleep better if their mortgage is paid. Yeah. And we got to take that into factor. What's going to make the client comfortable?
I think that's more important than anything.
Yeah, sometimes having peace of mind that your mortgage is paid off. Now, there's other people that will do the numbers, and we could sit down and mathematically do the numbers based on what is their current interest rate, right? Based on if there's any tax deductions that they can write off, and we could actually figure out financially, does it make sense?
He's going with a true number that way.
A number.
Yeah, but the true one. It's not a guesstimation because you go through everything and break it down and say, well, here's what it would cost you if you don't pay your house off early, and here's what it costs if you do.
And we can do that.
That's very smart.
But at the end of the day, we got to sit down and say, this is the financial benefit of not paying your house off, and this is the financial. You'll see what happens is a lot of times there's that peace of mind when people know they have their house paid off that may over.
It is.
It's
balancing emotions
with
logic.
And you got to look at both. Yeah. Now, right now, if you look at interest rates, if people have rates at 4%, 3.5%.
Historically, it's a steal right now, isn't it?
Yeah. So, you know, whether you can do better, probably can. And you don't have much of a tax deduction. Paying off the mortgage may not be as big an item today.
But it still comes down to the emotional element.
It's an emotional element.
Now, here's a real secret, and it's a way to do it without interrupting anything. You pay a little extra money. You figure out what your monthly payment is. Mm-hmm. You divide that by 12, and each month you send in 1/12 of a mortgage payment to go to principal. You have to tell the mortgage people that because if not, they'll try to apply it to future interest. But if you do that one extra payment a year, over 1/12 each time, you'll take a 30-year mortgage and it'll turn into a 22-year mortgage just like that.
I know.
That's a great way to pay the house off early without getting in trouble with Bob.
Well, and then they also programs sometimes have that program bi-monthly.
Yeah, bi-weekly. You pay like every 2 weeks instead of every month, right?
And that cuts it down to I think 20 years or so.
Yeah.
So
but be careful because there's people that charge you fees on that where you don't have to pay fees. You can do that on your own, right? So be careful on that. But there's strategies like that.
Yeah,
and dealing with someone like you, people that are watching can get that right plan.
Absolutely.
Yeah. I do argue though we're at the historically low interest rates, and you've got the bank on the hook to accept that same payment you're paying today. 30 years from now, that same payment. We already talked about what inflation's going to do to that dollar, but the bank's still on the hook to accept that.
Yeah.
We're in a very low interest. I think when we talk about paying our house off early, we were talking about those 12 to 15% mortgage days. But again, it all comes down to emotions. And if it makes you feel good to pay your house off, let's make sure you do it the right way. Number one, do not take money out of your 401k to pay the house off.
Absolutely.
Now you have a tax time bomb, plus you're robbing your own retirement.
Yes.
Do not borrow from your 401k to pay the house off. And those are about the two main ones you look at. And don't take your living expense money, your money you need food for, and pay the house off.
Right.
So if you want to have your review, just to give you that peace of mind before you make the decision, you can't on-fire a gun a lot of times. So before you make that decision, let's look at it logically on a piece of paper, the advantages and disadvantages. That's what Ben Franklin used to do before he made a decision, and he'd see which one made more sense that way.
Really?
So let's do that. Let's give you that confidence that Ben Franklin had to make sure you do the right thing, not only on your mortgage, but on your retirement plan. And it's no cost or obligation. If you call today, the number is right there on the screen.